And I just think we're going to enter a year here where there's a lot more focus on M&A as a way to drive growth.
Okay, we'll leave it there. My thanks to Steve Young, the managing partner of Manna Tree. I'm Jarrett Banks, signing off from the ICR Conference here in Orlando. Hello and welcome from the sidelines of the ICR 2025 conference here in Orlando, Florida. I'm Jarrett Banks, Editor-at-Large of Exec Edge. Joining me today is Steve Young, a managing partner at Manna Tree. Steve, welcome to the program.
Thank you.
Let's get right into it. Now, as someone who led General Mills' $1 billion emerging brands portfolio, what key lessons in your CPG experience have you brought over to Manna Tree?
Well, I think it's a great question. I mean, I think the couple things. The one is that the larger companies, mid-sized companies like General Mills, others in this space, they're looking for brands that can appeal to younger consumers, millennial consumers, Gen Z consumers, now Gen Alpha, and frankly, one of the things that really resonates with those consumers the most are health and wellness oriented products. And so that's definitely something that I took away from that experience leading that portfolio at General Mills, and it's part of what drives our thesis at Manna Tree today.
Great. Now, you mentioned the health forward food companies. You've got investments in Good Culture, Health Aid, and Verde Farms. Walk us through your investment thesis and how that's expanded a bit.
Yeah, so I think the place that we're focused, again, we're consumer health and wellness investors. Again, we're focused there in part just because we think that, again, it's one of those places that's going to have a real tailwind behind it as we move ahead. Consumers have time and again, especially younger consumers, have kind of shown that they're willing to pay for healthier products, and so it's where we focus. And it's what's led us to invest in companies like the ones you described. And our focus, we're growth equity investors, and so what that means is we're looking for later stage companies that have built their proof of concept, but frankly are looking for capital and operating expertise to go and drive scale. Scale is important today. The larger and mid-sized companies are less likely to want to acquire smaller ones like they might have maybe 5-10 years ago. They want scale. And so our model is all about trying to go and provide the fuel to go and get up the curve for those companies.
Makes sense. Now, speaking of tailwinds, the wellness economy is projected to reach $8.5 trillion in 2027. Which segments in that market do you see as having the most untapped potential?
Yeah. So we continue to think that food and beverage will continue to be a place with a lot of potential. When you think about protein, clean ingredients, minimally processed foods, lower sugar, no sugar, that's something that's going to provide a real tailwind in food and beverage. The VMS space, the supplement space, when you think about the products that people take to top up vitamins, micronutrients, macronutrients, that's going to be a really compelling space. One of the biggest trends we see kind of in the consumer landscape is this focus on health span. I don't know if you've heard that term before, but it's different from lifespan. I think in the past people were focused on, okay, well, how long can I live? Now it's about, well, how long can I live and be healthy doing it? And so when you think about that thesis, what you eat is really important, but how active are you staying? How much are you moving? We talk about the fact that things like pickleball, which didn't exist how many years ago? 5 years ago? It's now $3 billion in sales, on its way to $9 billion, if you look at the projections. That's all about keeping people moving and keeping people active. And that's just one very small example of that active lifestyle space that we think is going to be an important part of moving forward. And then just more broadly, clean products, clean ingredients. People are more and more focused on what's in the things I eat, what is in the products I consume. How do I make sure that that's done in as clean of a manner as possible? So those are the sectors that we think in the consumer space are going to drive outsized returns as we move ahead.
Great. Now, how do you help ensure that these portfolio companies maintain their health-focused missions as they scale?
Yeah, it's really important. It's important because I think, with scale comes the inevitable question of like, well, should we compromise this ideal? Should we compromise that ideal? I think the biggest thing that we try to do is we work with companies. One, we want to make sure we're very aligned with the founders, with the CEOs at the time of investing on, okay, what are the most essential things that are going to drive this product? What are the things that have to stay the same? And then frankly, what are the things that we might be open to changing moving forward? You need good alignment on that. And frankly, the other thing that needs to be part of that is the consumer. I mean, it's one thing for us as an investor or for a founder to have a point of view on what the most sacrosanct things are. But what does the consumer really want? We see time and again that when you stay close to the consumer and you don't deviate from what the consumer wants as you scale, people will come with you and you'll build great businesses around it.
Right. Now, I just want to dovetail on that. You mentioned that you focus on companies with 50 million plus in revenue that are near profitability. What are some of the specific characteristics that you're looking for?
Yeah, so at the end of the day, the number one thing we're looking for is that proof of concept with the consumer. And you say, okay, well, how do we measure that? In the consumer product space, third-party scan data, so like whether it's SPINS or Nielsen, IRI, we're big fans of looking at, okay, forget about points of distribution and how broadly distributed somebody is or a company is, where you're sold, what is your rate of sale? How does your rate of sale compare to the other competitive set? Are you out-turning the competition? That's the ultimate test of whether a consumer, a real consumer, is willing to pay real money for the product or service that you're providing. So we're sort of data junkies in the sense that we'll really look at those things. The mission of the company and the magnitude of it is important. We talk about the fact that healthier products, healthier services shouldn't just be confined to the wealthiest people in the world, or they shouldn't just be found at places like Whole Foods. They should be found more broadly. And so the potential scale of the idea, how big is the founder or the CEO thinking? Are we aligned with sort of the impact we're trying to have? That's an important part of how we evaluate companies too, because again, like we're trying to build scaled businesses that the larger companies, like my previous one, at some point might find an accretive part of their company. And so that scale is important.
Right. Now, how do you help position these companies towards a successful exit, whether it's an IPO or something else?
Yeah. Well, that's one of the things that if you think about some of the changes that this broader consumer products kind of emerging brand sector has seen in the past 5 years, it's this focus on unit economics. And what I mean by that is, top line sales, margins, EBITDA. Is this company going to come into a new owner and be accretive out of the gates? There was a time, 5-10 years ago where larger companies and acquirers would say, well, hey, we're most interested in top line sales. If the company's not profitable, we can leverage our scale, we can leverage our operating know-how to make it profitable. Well, the reality is that would happen occasionally, but it wouldn't happen all the time. It wouldn't happen in a common way. Many times these small brands would get into a larger company and it would be hard for that large company to go in and deliver bottom line growth. And so now today, and it's a function of a lot of things. It's a function of the interest rate environment. The cost of capital is higher now. People are looking for things that are immediately profitable. And if I can go and work my magic and make it even more profitable, great. But I don't want my acquisition model to be dependent on making a company profitable when they're not. So that focus on unit economics up and down the entire P&L is something we really focus on as investors.
That makes sense. Now, during the COVID era, we heard a lot about supply chains.
Yeah.
How do you help these companies optimize their supply chains?
Yeah. Well, part of it is our network. I mean, I think one of the things that makes Manna Tree really, we think, unique is that we're a great source of capital, but we've got a really big network kind of former operators, of former company leaders that we can tap into. We do that across the majority of our investments. We've got been there, done that operating leaders who are either advisors or a formal part of our boards. And the supply chain, to your question, has been a big focal point here over the last several years. It's not for the faint of heart right now, especially trying to build scale. And so it's a place that we think that just by tapping into our network and expertise, we can add value. We're really bullish on supply chain oriented solutions. One of our investments is in a company that, as of today, is now publicly known as Tandem Foods. It's a co-manufacturer in the high-protein, nutritious snacking space. We made that investment last year with our partners at Mubadala Capital, and that's focused on co-manufacturing for other large companies, high-protein snack bars and baked goods and things like that, because frankly they don't have the capacity to do that all on their own in-house. And so putting money and real operating muscle behind a supply chain solution like that is part of how you propel the industry forward.
All right. Now, the broader consumer sector has faced, challenges recently, but there have been some bright spots.
Yeah.
How do you help these companies be more resilient towards economic headwinds?
Yeah. Well, I'll go back to what I said about unit economics. So if I put myself in the shoes of a founder, it's a challenge when you're in a situation where you need outside capital to operate. When you need outside capital to operate, just to keep the lights on, that's when, compromising your ideals can come in. It can be really tempting to attract capital to compromise things. And frankly, like in the environment we've been in, it's just been harder to secure capital. Again, that's a function of a number of things, not the least of which is just the broader interest rate environment. If you've got great unit economics, if you found a way to grow in a measured way and to still have really great margins, the reality is you control your own destiny. The reality is you can bring capital in when it makes sense to bring capital in. You can weather the ups and downs. Now, I'm not trying to put rose-colored glasses on things, because there's real challenges that subscale businesses have, and we're as an investor there to with our partner companies to work with them to weather those things. But a big part of it is, if you've got that focus on really building a great business and building great margins from the onset, you put yourself in the driver's seat, and you never sort of need the outside influences to come in and help move you forward.
Right. I want to go a little bit off script here.
Yeah.
We've heard about processed foods for a very long time, but now we're hearing it from the likes of RFK Jr. Is this something that's good for you?
It's an interesting time, that's for sure. We don't at Manna Tree, we don't think that we really try to put the politics of it aside. Because at the end of the day, like, what our belief is that for a lot of reasons, and you mentioned one of them, there is going to be more and more consumer focus on what is in my food, what's been added to my food, how processed is it, and do I really want that? Again, put the politics aside, put any one given study aside. We're big believers that younger consumers, more consumers than ever, are going to really, really be thinking about what is in their food and what has been sort of done to their food to get it to market. And we believe that the brands that are both big and small, that are delivering cleaner products, are going to have a really compelling time here in the days ahead.
All right, final question. We're here in January of 2025. What's your prediction for the deal market for the remainder of the year?
I think it's going to get. I think it's going to get. You're going to see a marked improvement in the consumer space from what we've seen over the last 2 years. I think we've already seen that. I mean, just last week, a really great brand in our space, Simple Mills, sold to Flowers Foods. We closed 2024 with a number of different transactions that were happening at a pretty rapid cadence. I think the more certainty in the markets, more certainty around what the interest rate environment is going to look like, the fact that large and mid-sized companies are really focused on, okay, how do we reignite our volumes? How do we serve the needs of new consumers? There are a number of companies in this emerging brand space that have done what I just talked to you about. They've got great scale, great unit economics, and I just think we're going to enter a year here where there's a lot more focus on M&A as a way to drive growth.
Okay, we'll leave it there. My thanks to Steve Young, the managing partner of Manna Tree. I'm Jarrett Banks, signing off from the ICR Conference here in Orlando.